Welcome back. And in this lesson, I'm going to be teaching you how to develop winning strategy to beat different market conditions, okay? So here I'm going to give you 3 trading formulas. The first formula I will be giving you now is MAEE formula. But this formula is what formula you use for reversals. When you notice that the market is about to reverse, where the buying pressure is coming down or the selling pressure is coming down, how do you approach the market? Of course, the first thing, the very first strategy, I've given you the word, something like the body of market of price action. The very first thing you do is to identify the market structure. What is the phase we are in currently? Are we in accumulation? Are we in advancing? Are we in distribution? Are we in decline phase? When you have determined the phase that we are in, right, what is the next thing? Area of value. Find your area of value, use your Fibonacci, place your Fibonacci and mark out the place of discount, or look for support and resistance zones. That is, you go to your weekly. If you want to get your support and resistance zone very well, you go to your weekly time frame. When you go to your weekly time frame, you identify, okay, you just zoom out very well, and then you identify areas of multiple touches right from many years ago. You must put your eyes on the left side, the most obvious. Look at here, for instance, we have touch here, we have touch here, and then look at it, market came here and paused again. So it's an area of interest. Look at here, we have touch, 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 right? These are all areas of value. You locate your areas of value, and then next is your entry trigger. So you identify your entry trigger. Just place this on your system, on your wall, type it down and say, if market is in an uptrend, this is what I will do. The areas of value I will focus on is 61.8 Fibonacci level or 50% Fibonacci level. This is how to create a system that will make you profitable over time. As simple as this. Do not go complicating your strategy. And then what will I see? And I will place an entry. Okay, that is your entry trigger. What will I see? Is it momentum or change of character, that is chart patterns or failure swing, whatever it might be. And then do not forget your exit. Very, very important. Very, very important. Do not forget your exit. All right. What will I see? I will know that it is time to leave the market. If you have a reason to get into the market, you must also have a reason to leave the market. The same reason you saw that made you know that market wants to change direction is the same reason you will see to know that market wants to go in the other direction that will not favor you. So you take your profit immediately. All right. So let me go to a pair and let's practice this. So now I'm going to be using Bitcoin. Let me clean this off. So, as I said, right now, what is the market structure of Bitcoin? Let me go to higher time frame first. Your analysis has to come from your higher time frame to lower time frame. I noticed that here, Bitcoin changed character. We are having lower low, lower high, lower low, okay? For like weekly, you will notice that this is what? A high, right? But I noticed that there's a change of momentum, even if there is not yet a change of character in monthly time frame, there's no yet change of character. But I noticed that buying pressure increased from here all the way down. And in monthly, there is no yet sign that selling pressure has come in. I will take note of that. Why is market struggling here? because this is an important zone. This is an area of value. Okay, you can call it, when we come down to analysis, I will also teach you other blocks. We have monthly order block here. Is another block. We'll do it in the subsequent analysis. So what we'll be doing in subsequent classes now is to analyze different pairs. I'll be bringing in different concepts while we do this analysis. So this is an important zone because is what there is another block, monthly order block here. So having taken note of this, that there is monthly pressure here, even though there is not yet break of structure, because here, this is when we'll have a change of character in monthly. Okay, this is what we have. When market breaks above this, we said, okay, now in monthly, we are in an uptrend, proper, but we are in an uptrend anyway. Some persons may call this retracement, but for me, this is not a retracement. There's what I call a valid pullback. This is not yet a valid pullback. Why? Because the previous red candle, the last red candle, okay, is still intact. And every buy that happened did not go above it. Before I call anything a pullback, I must see that the opposite candle went above the previous candle. Okay, having taken note of this, let's go to weekly time frame. Now, if we notice what is happening in weekly time frame, we can see here, we can see clearer after we made this low. Okay, I cannot call this a valid pullback because it did not go above this, but to some persons, this is what a pullback, but it's not a pullback for me. So I have this one run here up to this point. This is this, and then I can call this a valid pullback because this went away. So I have lower, I have here lower low, lower high. Okay, we have lower low because this is only when we came below here, we have lower low. Okay, and then next thing, this is our previous high, right? Remember, the next thing we went right above it. This is my first signal for my swing trading. This was when I sent out signal to people that Bitcoin is going to go up. So people who are trading with me caught Bitcoin at this zone because I told them it's time to buy Bitcoin, right? So we waited for what market to come back into the zone, and then they bought and we kept going. So this is where we have change of character for a position trader. A position trader uses weekly time frame to place entry. This is only when a position trader got entry for Bitcoin, and then or maybe even some swing traders use weekly confirmations to be double sure that once they strike, they are making money. If we have change of character in weekly, monthly, forget about it. All right, is a high chance trade or setup. So now we have change of character here, and then we continued higher high, higher low, higher high, higher low. Look at this, higher high. And market is struggling because this is an area of value. Look at why they struggle. Look at how many touches we have here. 1, 2, 3, 4. Okay, this is a zone. This is all the zone. So there is like a stumbling block. It shows that there is something about this zone is an area of value. So now we notice that what selling pressure is coming in, but this selling pressure have not gone below the bullish candle. Do you understand? The last bullish candle. So for me, if I'm using a weekly time frame, I am still intact. There is nothing confusing. Someone sent me and said, Bitcoin is confusing. There is nothing confusing here. Okay, if you are using momentum, as long as it did not go below this candle, we are still intact. Our momentum is not yet much. We are still in what? In a bullish ride, but we are struggling here because this zone is a monthly zone. There is a monthly order block there. There is a weekly order block there. If I try to streamline this to weekly, that is to streamline my order block to weekly, I will streamline this. I will bring this and put it here. So we are currently inside weekly and monthly zone. That is why we are struggling. Another block is simply the last blue candle before a ride that broke structure, right? This is a low, and this is the last blue candle in weekly that broke it. The same thing is applicable to monthly. Why I drew it, this is a low, this is a low, okay, and this is the last blue candle that broke it. If it is for an uptrend, okay, now if we identify that this is the previous high. Now, where is the last red candle that broke it? That is our other block, right? We mark it out as what? Other block. Okay, so let me now go down to, having known what is happening, I'm not yet convinced about whether to start selling in Bitcoin. All right, we are still intact in an uptrend. Then I'll go to daily. Let me see what is happening in daily time frame. Now, in daily time frame, I noticed something very important. Okay, this is the last blue candle that gave us that high. If I'm using momentum to trade, the high I can see is this, not this blue candle. This is it. And then we have a selling pressure that suddenly came in. And this selling pressure covered how many of this, covered this bullish candle covered. Now, if I'm a day trader or my swing trader, I'm a swing trader, I may consider taking my profit now, because I can see that what maybe market want to embark in a weekly retracement. And where will I be expecting these weekly retracements to end? I will place my Fibonacci. Remember, we have higher high, higher low. So this is my previous low. I'll place my Fibonacci this way and say, okay, if this is going to happen, I will expect buying pressure to come in back from this zone. Okay, I will expect my buying pressure to come in back inside this place. So once market comes back inside this place, between 26,000 and 32,000, I am going to start buying Bitcoin again with my SL slightly below the previous week's low. Okay, this is what I will be saying now. I will go back to my daily. This is how I analyze from highest time frame to lowest time frame. So I'll be taking my profit. So knowing that the selling pressure is coming in now in daily, I will go down to 4 hours time frame. Are you with me now? So when I go to 4 hours time frame, I will again identify my market structure. Okay, we have here, after we made this high, okay, this is higher high, higher low, higher high. Look at this, higher low, higher high. And where is our low? Here. Change of character in 4 hours time frame. So it means that what this market is embarking on a retracement. Your difficulty in any asset is your inability to identify the market structure. And I've taught market structure over and over. And I'm just teaching you what I call a valid pullback. Please take note of this. For me, a valid pullback is when that candle that pulled back went below the previous opposite candle. If we are in a sell trend, or as we are in a buy trend, let me go to weekly. I saw something like that in weekly. I cannot call this a pullback in weekly. Look at my candle, because this bullish candle still covered it. But to some persons, it's a pullback. And when you go to lower time frame, it's a pullback. But if I'm trading weekly time frame, this is no pullback for me. Okay? If I'm trailing stop, what I call trailing stop, I think I'm going to teach trailing stop in the next class. I use weekly candle to trail stop. So if I made entry here, for instance, and this market moved, immediately this week close, I will bring my SL at this point. If this week close, I'll bring my SL here. If this week close, I bring my SL here. If this week closes, I'll bring my SL here. That is how I trail stop and continue to ride with the trend without closing my position. All right. So back to 4 hours. So knowing that 4 hours is now, showing us a down move because we have broken below a support zone. I can now, if I'm trading like a day trader, I'm trading Bitcoin as a day trader, I might be considering selling Bitcoin. Or in order for me to get a great feedback, a great opportunity or confirmation, I will mark out this place and wait to see price come below this bullish candle so that I can confirm that this indeed is a pullback trying to happen. I like to use weekly momentum to confirm. So that once you confirm, you hit, all right, because market can continue buying at this zone. So there's nothing confusing about Bitcoin at this point. So let's assume that I've confirmed this. Now look at this. Will you call this, all of the things that happen here, will you call it a pullback? For me, this is all one move. This is all one move up to this point, yes. You know why? Because this candle, all of the bullish move that happened here did not go above this candle. So up to from here to here is one move for me. What will I do? I am going to look for, this is the last support zone. I'm going to wait for market to come inside this zone. Why? Let me place my Fibonacci now. For a self Fibonacci, you move from high till low. You see this? I will mark here 61.8 Fibonacci level, and then I'll wait for market to enter here. When market enters here, I will go to 5 minutes and wait for change of character and place my SL above here and sell. If I want to risk this, I will sell from inside this zone. Anything that is below this zone, I am not interested. If market did not come in here and continue selling, fine. I will repeat this until I get great opportunity to buy or to sell. All right, I think we have done justice to the first formula, MAEE, that is find your market structure, identify the areas of value, find your entry, and find your exit. If you entered by seeing a change of character, exit by also seeing a change of character in the opposite direction. If you entered by using momentum, only exit because you also saw momentum that is going to come against you. Do not exit because you now looked and saw that you have $1,000 profit. That is not how to trade, okay? But exit because there is a reason that price is showing you that you need to exit. Now, let's go over to the second formula. Okay, this is the second formula that we have, the MBEE formula. Remember that the first formula that I gave you, which is what? MAEE, that is market structure, area of value, entry, and exit. We use it for reversals. When market is reversing to the downside or reversing to the upside. In other words, we use it in a trending market. When market is trending upwards with obvious higher highs and higher lows, okay, you wait for retracements or find areas of value, and then you make entry. Now, this one, we use MBEE formula in a build-up market. When market is in a build-up, a consolidating market, a ranging market, okay, when you are having series of, range like this, market is not really pushing up or down. That is when you use this MBEE formula. So the first thing about price action has always been what? Your ability to correctly identify the market structure. That will now determine what strategy you are going to be using. So if you identify the market structure in this case and notice that the market structure is in either accumulation or distribution phase, that is when you use this strategy. Do you understand me? But if you answer the first question and notice that what market is in reversal phase, either decline or advancing stage, that is when you use the first formula. So now we have identified the market structure to be distribution or accumulation phase. What do we do next? Build up at accumulation level shows that buyers are willing to buy at higher prices. And there is a lack of selling pressure to push price lower. Okay, this is the way it is. We have accumulation here, we have expansion, we have distribution here, we have decline, and then we go back to what? Accumulation. So build up at accumulation, which is this, simply shows that buyers are willing to buy at higher price. Even though that this level is not the lowest price of these assets, buyers are willing to buy there. And then there are, lack of selling pressure to push price lower. So what you will now see small candles of selling pressure. Okay, small sell candles, you will now be seeing them. This is my counsel. Don't trade into traffic. I've said it before. This is like a traffic. Don't trade into traffic. If you are selling breakdowns, that is, selling breakdowns is like you are selling in distribution. You don't want to sell into support, since that is where buying pressure is locking. You don't want to say this is support here, this is resistance here, this is resistance R, this is support down here. You don't want to be selling here when market is consolidating after an uptrend. For instance, look at this. You don't want to be selling at this zone. If you must sell here, you must be selling up. Only be selling up. Okay? Don't sell down as support. All right? Don't sell down as support. Now, I want you to think of build up as the market storing potential energy for the move that is going to happen later. Anytime you see a consolidating market like this, remember what I told you during introduction and growth phase. That is the phase whereby investors are pulling their money together. This person puts money, the pressure is being increased. Sellers are putting money, buyers are putting money. That is why we have something like equilibrium, balance. That nobody is winning. But just have it at the back of your mind that before you know it, pressure will be more on one side, and market is going to move in the direction of where we have more pressure. And when this happens, that is when we have decline phase, or that is when we have advancement phase. So it will be wisdom that in a build-up market or in a ranging market, or after an advancing phase, you sell up, all right? You sell at resistance and buy at support. But if I am to trade, if I notice that the selling pressure is coming down and this is accumulation phase, that's after an advancement, I will only be selling to increase my chances of winning. Remember, I told you there is no guarantee that market is going to break down after a distribution phase, or the market is going to break out after an accumulation phase. But you must stand at that point where your chances is more than 50%. Knowing that after accumulation, we have advancement. So you should be buying at the support of accumulation, selling at the resistance of distribution. It's as simple as that. Do you understand this? Because this is what sellers and buyers storing up potential energy for what is going to happen next. So the next thing to do, how you can trade this build up, is to set what? A sell stop here. That is, or a buy stop here. Go back to the class where I taught 4 pending orders you can use to capture the market without waiting. If you have missed any class, I beg you to go and start from the beginning. You can't jump and get everything. I'm building this thing as adding blocks. That is what I taught you, that is called buy stop and sell stop. You use buy stop when you are awaiting a breakout after accumulation. You put a buy stop above the resistance zone, so that eventually when this market breaks out to break, it will capture your order whether you are online or not. The thing is that nobody knows the day or the hour that this breakout is going to happen. Then in a build-up that happened in distribution phase, you add a sell stop below the support of this distribution, so that when market breaks down, you will not miss out on the ride. Remember that this is market storing up energy. So a breakout and breakdown is usually massive. This is a long ride. This is a long ride that made people a lot of money, okay? Market moving, Bitcoin moving from about 44,000 to about 40,000 is millions of dollars for people, depending on your capital. Okay, so whenever you have build up, okay, is storing of energy. Another way you can trade build up is just wait for that struggle to be over. Wait for breakout, wait for breakdown, just as I just did. If I missed this ride, for instance, I missed this breakdown, what will I do? I will mark out my area and wait. When market enters here, I will still join, put my SL above here and join, because this is a time of uncertainty. So the best way actually to trade build up is to wait for breakout and then mark out your zone, area of value, maybe using Fibonacci, wait for retest. When price come into there, wait for change of character, get your confirmation or signal, and then you ride down with the market. That is your what? Entry trigger. When that your entry trigger happens, you ride. And then when you see change of character again, the market wants to reverse to the opposite side that you are trading, you will exit the market and secure your profit. I don't know if this is well understood. Let's move to the third formula that you can use to make money in the Forex market without using any form of indicator. As a matter of fact, this is the best strategy you can use. Yes, let's move over to it. So what is this third formula that I'm going to teach you right now? I call it the DEARE formula. Now, this is the best formula out there you can use to smash any asset in the financial market. Why did I call it the best? Because it will capture every market condition. You don't have to trade like every person. You have to trade like yourself, what is convenient for you. And what is this formula? Develop your trading plan. Develop your trading plan. Secondly, execute that your trading plan. Thirdly, record your results. Thirdly, review your results. Should we delve into this right now? No. I'm going to teach you how to develop your trading plan and a winning trading strategy for yourself and as convenient for you, according to the kind of trader that you want to become. If you don't want to miss out on this, don't miss week 9. I am going to treat it in week 9, both for day traders, both for swing traders and position traders, even for scalpers, depending on the kind of trader that you want to become. So now, execute that your trading plan. One thing about profitability in the Forex trading, I must tell you, is your profitability is in your hands, not in the hand of the market. If you have the discipline, listen to me, if you have the discipline to execute your trading plan 100% all the times, Forex will give you all the money that you need, all the money that you want, I'm telling you. And then when you execute those plans, record both your wins and your losses. Losses, record it. You will learn. Go back and back test. See what your record is like in a month. Review it and make corrections where need be. Review it. That's the last phase. Review it. Always review your record. I taught you in my page how you can keep a trading journal. Maybe I can treat this to how you can develop a trading plan and how you can keep a trading journal. That will be the topic for week 9. Okay, so I will quickly stop here. Don't miss this part. This is the best way to trade, whereby you don't need to follow anybody on YouTube. You don't even need to follow me because I'm a full-time trader. You might be working, you might be into business or any other business that need your physical attention. You can still make as much money you want to make in the Forex, no matter your kind of personality, no matter the kind of thing you do. It all depends on what your trading plan. Develop a trading plan that will suit your personality and your schedule. Now, see you next week in week 9. Don't miss out on these lessons.